TFSA Explained, the ultimate guide to tax-free investing in Canada. I have 5 years experience investing into TFSA and have spent over 15 hours researching for this video. I have gone through all CRA documents, case studies and highly acclaimed articles and YouTube videos on this topic. After all that due diligence, I present you this video. TFSA Explained, everything you need to know about Canada's tax-free savings account. This is all the video you need to watch to know everything about TFSA. I have broken down this video into different subsections. For anyone who has already experienced TFSA and has been using it, you can skip to the sections that may be new to you. But for anyone who is new to TFSA, I recommend that you go through the entire masterclass. This one detailed video might finally get you to start investing and take you a step closer to your financial freedom. So let's get to it. Chapter 1. What is TFSA and can you invest in this savings account? TFSA stands for Tax-Free Savings Account, and right off the bat, no, it is not just a savings account. You can use it as an investment account and almost everyone uses it like one. This means you are able to invest stocks, ETFs, bonds and GICs into it. With this account, you are able to invest and grow your money without paying tax on your capital gains and dividends. Let me explain. Every paycheck that you earn from your employer, you are taxed roughly between 20 to 45%. Let's say you make $69,500 a year. You will earn roughly $2,000 every paycheck, while you are taxed with $673. That's 24.5% tax taken off your paycheck. Everybody knows about this. But what a lot of people fail to realize is taxation does not end there. If you were to invest this already taxed money into a regular non-registered account, you would be taxed on the profit you make. Let's say if you took the $2,000 you made and turned it into $3,000, you would again need to pay tax on your gains. Fortunately for us, that's where TFSA comes in. If you were to put this $2,000 into your TFSA, invest on it, and if you were able to turn your investment into $3,000, you would pay $0 taxes on your $1,000 profit. And this is just the tip of the iceberg we are talking about right now. Chapter 2. Why everyone should open this account. There are 3 main reasons why you should open a TFSA account and start investing in it. Number 1. There's no downside to opening a TFSA account. I will start with the not so obvious reason. You should start investing in TFSA because there's really no downside to opening one and investing on it. A lot of people don't know this, but you can withdraw out of your TFSA any time of the year and there's no penalty you need to pay for doing so. I had invested close to $14,000 in my TFSA, was able to grow it to $17,000, and I withdrew $15,000 to buy my first car here in Canada. I was not charged a single dime for my withdrawal. The best part? You don't lose the $15,000 contribution room on your TFSA forever. You are able to put the withdrawn amount back. Just note that you will have to wait until the next year to invest the money back in. There are other registered accounts such as FHSA and RRSP that are tax advantaged too, but neither gives you flexibility to withdraw amounts whenever or however you want to. With TFSA, your funds are never locked out. Number 2. Tax-free compound. I had in the beginning of the video already mentioned that any gains and dividends earned in TFSA are tax-free. But there's more to it. You see, it is a bigger deal than you think it is. Let me give you an example here. If you invested, let's say $10,000 to your TFSA, and with growth and dividend, let's assume you make a return of 9% each year. On year 1, you will have an ending balance of $10,900. If you did not withdraw your profits and you kept investing your gains, at the end of year 10, you will have a total of $23,673. Not only did you earn more than double of your investment in the 10 years time frame, you technically grew your contribution room by $13,673. I will talk a little bit more about contribution room shortly. A little off topic, but did you know that you pay tax on the interest you earn from your bank? If you are putting the same $10,000 in your high yield savings account, the interest you earn will be treated like a fully taxable income. So in our case, for a person who earns roughly $70,000 a year, you will make $4,500 less with your savings account. Also, I have to be very transparent here. This example is purely hypothetical. No bank in Canada will ever give you 9% interest on your deposit. It will be in a good day closer to 5% and your gain will look something like this. Number 3. Government benefits. This one might be the least talked about benefit of TFSA. TFSA withdrawals are tax-free and don't affect your old age security (OAS) or other federal benefits because they are not counted as income. This makes TFSAs excellent for supplementing retirement income without triggering OAS clawbacks, unlike RRSP withdrawals. Chapter 3. How to open a TFSA. Opening a TFSA is easier than opening a bank account. This is true as long as you meet the 3 criteria below. Number 1. You are older than 18 years old. Number 2. You are a Canadian resident. Number 3. You have a Canadian Social Insurance Number or SIN. The first and third point are self-explanatory, but I want to quickly touch on the second point. You don't need to be a Canadian citizen or even a permanent resident to be eligible to open TFSA. If you are a tax resident in Canada, you are able to open your TFSA account. If you are not sure, you can always call CRA to confirm on whether you are eligible. I have called them in the past and they were very helpful. Okay, now that you have figured out you are eligible to open a TFSA account, you have 3 main options. 1. Open your TFSA account at the big banks or the small ones. Number 2. Open your TFSA account at online investing platforms. Number 3. Open your TFSA in financial services company. You can open the TFSA at any of the big banks or the small ones, and you don't even need to pay a visit to the branch to get started. Using the bank app on your phone or through the bank website, you are able to open your TFSA account. This is easy to do, but this isn't going to be my preference. Most of the banks either have monthly fees, charge you for each stock or ETF when you buy or sell, or won't offer you with all the investment options. If you want to invest in GICs in your TFSA, banks are not a bad option, but for everything else, I would skip them. Similarly, there are financial services companies such as Canada Life that offer TFSA accounts, but that would not be too attractive either. They mostly offer mutual funds and ETFs but have high management fees. TFSA account with these companies would not be my top pick either. Finally, let's talk about online investment platforms and the ones that I personally use to invest in my TFSA. Wealthsimple and Questrade are 2 top-notch investment platforms that I use to invest in TFSA. They have no fees when you buy or sell Canadian stocks, and both of the platforms are very easy to use. They also have neat features where you can auto-invest and you can also auto-invest in schedule. Both of them also let you reinvest your earned dividends. I have a separate video on both of the platforms linked below where I talked about more advanced features that each of the apps offer. But to get started, it's simple enough for you just to download the app and sign up and open your TFSA account. I have my affiliate link for both Wealthsimple and Questrade down in the description section below if you want to get started today. Chapter 4. Contribution Room Explained. I have already mentioned about contribution room a few times in this video, but what do I exactly mean by this? And how do you earn the contribution room? Let's break it down the simplest way possible. Tax-free savings account was officially introduced by the Canadian government in 2008, and people could put money on it the following year in 2009. It was created in hopes that people would build a habit of saving money and to make sure that low income earners would benefit from it, where they don't pay taxes on small gains from things such as interest on deposits. So, starting 2009, you would be able to put a set amount that you can see in your screen right now each year. Come 2026, you are able to invest a grand total of $109,000 in total. It is important that I mention that your contribution room is replenished with new room first day of every new year. But wait, before you get too excited, remember one of the things that I had talked about in the video a few minutes earlier? You need to be 18 years before you are eligible to open a TFSA account. Yep, that is when your contribution room starts too. So, the above list is only applicable for those who were 18 years or older in the year 2009. If you were born in 2001, you would have turned 18 in 2019 and your contribution would look something like this. In 2026, you would be able to contribute a maximum of $51,500. Okay, let me give you a different scenario and I will give you an example of myself. I was born in 1996 but came to Canada and became a resident of Canada in 2021. You might think that I would have contribution room based on my age, but you would be wrong here. Your contribution room starts when you turn 18 or when you become a resident in Canada. So for me, I have a maximum contribution room of $39,500 as of 2020-26. You might also notice that the annual limit changes every few years and sometimes in consecutive years. This is a mechanism built in to factor in inflation. As the purchasing power of Canadian dollar weakens, the contribution room grows, and the numbers are rounded to the closest $500. The topic of contribution room can get a little bit confusing, so if you are still not very clear, feel free to drop me a message in the comment section down below. Chapter 5. How to check your contribution room. For anyone who is watching this video who has not invested in TFSA in the past, the table that I showed a minute before is enough for to know where you stand. However, when you start investing, you will want to keep track of how much you have invested in TFSA and how much contribution room you have left. There are two places you will need to check to see your contributions. Let's start with CRA website. First, sign in to your CRA account. Then, once you are signed in, scroll all the way to the bottom of the overview page. There, you will find a section that says Savings and Pension Plan. Under that section, you will find your 2026 TFSA contribution room. Do note that the TFSA room figure is updated just once a year at the beginning of the year. What this means is, if you invest $1,000 in Jan 20 of 2026, CRA website will not reflect your contribution. So, you will have to use this metric in CRA alongside the platform you use to invest in TFSA. For example, in Wealthsimple, you are able to easily see your deposits and withdrawals for the year. Once you use the CRA data in conjunction to the data in Wealthsimple or Questrade, you will be able to calculate your contribution room accurately. Make sure you are tracking this accurately because there are penalties of overcontribution. And that is exactly what we will be covering next. Chapter 6. Penalties and what not to do in TFSA. TFSA is the least restrictive registered account in Canada, but it still has a few limitations. Do it wrong and CRA will penalize you. Here are two mistakes that you certainly want to avoid. Number 1. Over-contribution penalty. If you go over your limit, the penalty is 1% of the excess amount per month. Let's say if you were to go over by $10,000, that is $100 a month in fines until you withdraw the excess. CRA is very strict about it, and when the system flags you, you will likely get an email from CRA notifying you about your overcontribution. The unfortunate part is you aren't charged the 1% after CRA notifies you. The 1% charge starts immediately. So if CRA took 9 months to notify you, or if it took you 9 months to figure out that you are over contributing, you will be paying a penalty of 1% for the whole 9 months. Number 2. Day trading. I will be honest here, this is a little bit of a gray area, but the rule is simple. You are supposed to treat your TFSA as a savings account or an investment account and not a trading account. What I mean by this is, you are okay to buy a stock or an ETF and hold it for a longer time. But if you are buying and selling stock throughout the day and throughout the month, CRA might flag your activity. If you are trading stocks too aggressively, the CRA can declare your account a business and tax all your profits as income. If you are someone who is buying and selling a few times a week or a month, there is nothing you need to be worried about. Just don't actively trade in TFSA and you will be fine. Chapter 7. TFSA Withdrawals and Consequences. I have already covered this in the chapter 2 of the video, but I want to reiterate it here. You are not limited to how many times you withdraw from your TFSA and how much money you withdraw. The money you put in your TFSA is available to you anytime. As soon as you convert your ETF or stock into cash, you can withdraw the cash to your bank account. And no, you don't lose the contribution. Let's say you withdraw $10,000 in 2025. While you can't deposit the same money back in the same year, you get that contribution room back. So instead of being able to deposit $7,000 the following year, you can deposit $16,000 in 2026. I should point out that you can put in the $10,000 back to your TFSA in 2025, but CRA will penalize you for doing it. You will be charged 1% each month for doing it, so no, don't do it. But if you do it correctly, you don't pay any tax on the withdrawal, and the best part is, neither Wealthsimple or Questrade charges any fees on the TFS withdrawals. So it really costs you $0 to withdraw from your TFSA and put the money back the following year. Chapter 8. Can I have multiple TFSAs? This is a common question that I get asked in regards to TFSA all the time, and the answer is simple. You can have TFSA account in multiple platforms. At one point, I had GICs in my TFSA account at BMO Bank, a big mistake by the way, TFSA account in my Wealthsimple, and TFSA account in Questrade. Today, I just use Wealthsimple and Questrade for my TFSA needs. The important thing to keep in mind is, regardless of how many and which platform you use for investing, your contribution room stays the same. For example, in 2026, you can contribute $5,000 in your Questrade TFSA and you can invest $2,000 in your Wealthsimple TFSA. But you cannot exceed that. All of the different TFSA accounts are tied to CRA, and if you over contribute, you will be penalized for doing so. Chapter 9. Can you lose your TFSA contribution room? Earlier in this video, I mentioned that when your stock grows and appreciates, that appreciation does not eat up your contribution room. For instance, if you opened your TFSA in 2009 and received an annualized 9% return, you will have $262,219 in your account as of 2026. This shows that by putting $109,000 in your TFSA, you have made $153,219 in profit, and you have legally grown your contribution room by this dollar amount. Unfortunately, the inverse of this is possible too. If you are buying and selling meme stocks, TFSA is not where you do it. Instead of appreciating, if you lose, let's say 30% each year, you would be standing at $15,621 in 2026. And the room once lost is lost. You can't say, I just have 15 grand in my TFSA and put in the lost contribution room amount. You see, CRA just tracks the deposits and withdrawals that you made in your TFSA account. It really does not care if it's increasing or decreasing in value. Chapter 10. Investing in US stocks and ETFs. Given how large the US economy is, as time progresses, I have no doubt that you will be inclined to purchase US stocks and ETFs. And yes, you can buy US stocks and ETFs in your TFSA. But there's a small thing that you will need to remember when you are buying US dividend stocks. You see, while you don't pay tax on the dividend earned, you will pay 15% withholding tax. The US and Canada has a tax treaty where the IRS in the US will keep the 15% of your dividend earned. It's not the CRA or the broker keeping that money. Personally, I just invest in US growth stock in my TFSA, and I don't have to worry about this 15% withholding tax. And even if you are paying this 15% tax, the amount is automatically deducted before it hits your TFSA account. So you don't have to do any extra paperwork, which is nice. Chapter 11, TFSA Conclusion. Get started today. Well, if you have made it this far to the video, I feel confident that you are ready to start your TFSA investing journey. If you are very new to investing, I would recommend you sign up to Wealthsimple. I have my affiliate links down below. The platform is very easy to use and the phone app is great. To begin with, you can start with very small amounts. It can be $10, $20, $50 or whatever you are comfortable with. As you get more and more confident, you can invest larger amounts. Once you get a hang of things, investing in TFSA will be more or less like playing a game, and before you know it, you will be addicted to it. Hope this video was helpful, and let me know if you have any question about this tax-free savings account that Canada has to offer. I will be happy to answer any of your doubts you have in the comment section down below. Thank you for watching.